Hello options traders and happy Friday everyone. Well, actually it's not a real happy Friday because it was a tough way to round out a week. I'm talking about February 28th of 2020, of course, when the Dow opened up another 1,000 points down. So it has been an incredibly tough week. But during the week I showed you a couple of technical indicators that can help you get a handle on whether we might see, especially during the day, some reversals. And we talked about the TRIN in one video, and then I posted one on the TICK and the TIKI. And if you recall in the first video on the TRIN, part of the calculation used what was called the AdvanceDecline ratio. And then in the second video in the TICK and TIKI, we talked about upticks and downticks. So I've had some traders email and say, well, what's the difference between advancing and declining versus an uptick and a downtick? And good questions. And so I just wanted to post this video here to give you some insights into what this means. It's actually a very easy distinction, but it's important and it will help you to understand what those calculations are doing. Let's start with advancing and declining. These terms depend strictly on the stock's closing price. That's it. That's how it's always making its comparison. So let's say that ABC closed at 100 and today it opens at 102. If that happens, this is an advancing issue. As long as the current stock price, we're looking at that last trade, as long as that is above 100, it's an advancing issue. However, when we're using the terms uptick and downtick, these terms depend on the last trade. So if a stock is at 100 and trades to 100.05, that very next trade, it's on an uptick, regardless of where the closing price was. So if it's at 100.05 and the very next trade is at 100.04, it's on a downtick. So again, the upticks and downticks are just comparing trade to trade, and it has nothing to do with the closing price. So that's a fairly simple definition, but it might help you to understand it if you see it graphically. So here's the difference between the advancers and the upticks and downticks. Let's say our stock closes at 100, opens at 102. That's an advancing issue. And as long as the current stock price is anything above 100, it's going to get calculated as an advancing issue. So that's what would be used for the TRIN. But let's say the very next trade is at 101.95. If we compare this way, from 102 to 101.95, that is a downtick. But if we compare it this way to the closing price, it is an advancing issue because 101.95 is greater than the closing price. So this will also help you to understand why the TICK and TIKI are so much more volatile than the advancers and decliners. It should be fairly obvious to see it on the declining side, but let's just run through it anyway. Our stock closes at 100 and the first trade on the opening bell here is at 98. That is a declining issue. And as long as the stock's price stays below 100, by the close, it's going to get recorded as a declining issue. But let's say the very next trade is at 98.05. Just depends on how we compare them. If we compare in this direction from trade to trade, that is an uptick because 98.05 is greater than 98. But if we compare this way to the closing price, then it is a declining issue. And as long as that stock price stays below 100, it's always going to be a declining issue, even though there could be a lot of upticks during the day. So hopefully this clarifies the question and helps you to understand those two technical indicators a lot better. For those who'd like to learn more about the arts and science of options trading, please check out the Alpha Trader course and strategy lab at optionsa2z.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.